My name is Steve Hansen. I'm president and CEO and founder of Acme Lithium. We're an explorer and developer focused on specifically North American lithium projects. I founded Acme Lithium about 2.5 years ago with the belief that really it's a generational opportunity for investors, driven by this incredible demand for this commodity called lithium. Hybrids, EVs. We use lithium batteries in our daily lives. There are cell phones and laptops, and really one of the biggest areas of growth is in grid storage. So I assembled a package of properties, and their location is very important. Rocks do stop and start, but a location next to existing production is really important. And there's not many places where lithium is currently produced in North America. So we have a brine project in really one of the epicenters of development in the US in Clayton Valley that we're actively exploring. In fact, we're in the midst of a pump test right now at that project. I have a sedimentary claystone project next to Ioneer, a project that's about to go into construction in the first quarter of 2024. We're the largest landholder just south of the Tanko mine, lithium, cesium, tantalum mine in southeastern Manitoba. And we got a large land package in northern Saskatchewan. So we're well positioned to grow in this market, and looking forward to delivering on some milestones in the next quarter or two.
Yeah, hi, Robin Dunbar. I'm the president and CEO of Grid Metals, and we're a lithium explorer and developer located in the province of Manitoba. And our investment thesis is that we're looking to advance our project into production and be one of the next lithium mines in production in North America. We have just outlined initial hard rock resource, and we've signed 2 agreements to look at toll milling and acquiring our own processing facility within trucking distance to site. And we're currently in permitting and development of those projects, with hoping to get in production in late 2024 or early 2025.
I'm Jeff Wilson. I'm the president and CEO of Eureka Lithium Corp. We are a relatively newly formed and founded lithium-focused exploration company. We sort of base the company's formation on an alignment with a well-renowned prospector named Sean Ryan, who's quite famous for his gold prospecting in the past. We partnered with Sean based on his thesis that there were some quite compelling and yet underexplored lithium prospects in the northern part of Quebec, so removed from where much of the action in southwestern Quebec is currently happening. Based off of historic government lake sediment sampling that had been known for quite a while, quite an extensive database. And through Sean and a collaboration with Eureka, we were able to pull together a significant land package in northern Quebec. We've completed a $6.7 million financing and engaged this summer with Ground Truth Exploration to commence quite an extensive field program of early stage prospecting, sampling, and target delineation in northern Quebec.
Guys, thanks very much for that intro. Look, we've seen a lot of excitement out there at the moment. We've also seen a lot of value created. Lithium pegmatite seems to be flavor of the month. Some companies have grown in value tremendously. How do companies like yourselves take advantage of that? Is it really a case of business as usual? I mean, Steve, how are you approaching it?
Well, I think we've seen sort of these waves from this cycle that have gone on. We saw an initial wave in lithium back in sort of 18, 19, 20, and then there was a bit of a softness in the market, and then we've seen this incredible wave that happened over the last year and a half, and then things have kind of pulled back. Partly, in the junior market, I think it has to do with that a lot of companies, there's many more companies now in the lithium sector than there were certainly when I started Acme Lithium. And so I think, with a crowded sector here right now, it's really about delivering on fundamentals at this point. I think investors are looking at when are you going to go into production? When are you going to have a resource? It's success with the drill bit, like we all know here. And, so I think that you really have to deliver on your fundamentals. And that's certainly what Acme is focused on in the near term.
And Robin, you're definitely taking advantage of this, because you've kind of segued a bit, haven't you?
Yeah, we segued. We had our lithium tenements next to our nickel project in Manitoba, and we acquired the rights back in 2017. So really before the lithium frenzy got going, and we knew that there was some inherent value there, and we did not commence serious exploration until we felt that the fundamentals were there. In terms of the opportunity, we think that obviously with the EV adoption rates in North America, and there's a kind of generational opportunity here that's going to unfold unevenly over the next 5-10 years. And we take some stock in the fact that some of the smartest minds in the mining business, the Glencores, Rio Tintos, they're moving into lithium as well. So it's not just the juniors. But then you get into with a really favorable backdrop, what is your project, and what's your timeline to production, and again, are you going to have a mining project? So that's really the focus that we have is, can we at some point start making some money, because there's great margins to be made in the sector.
And Jeff, for you, obviously, new kid on the block, really. You've obviously, well, I know you through Precipitate Gold, but did you stake this? How did you get this deal?
We did this. It was staked by Sean Ryan, but we then aligned with Sean and his group to vend these into Eureka.
Right. So the question is obviously timing. In fact, I had a conversation. I want to say this. I'm pro battery metals, pro lithium. But what we're seeing out there is quite incredible. There will be the usual fun and games played here. But I was having a conversation with one of the analysts this morning, and I used the line, well, who can blame CEOs for taking advantage of whatever they can after 2 years of a very difficult market? Would you argue the case, Jeff, that look, right, it's about whatever it takes to kind of stay above water and be able to raise money, cheaper money at that?
Yeah, I mean, I think there's, in our business, certainly it is, in the junior, and the more junior you go, the more likely this is to happen. That's always been the case in our business, where, people are sort of chasing where there's access to capital, because you can't do any meaningful work if you don't have cash in the till. So, I mean, it's a product of the industry we work in. I think in this case, however, I do think you want to make sure that, this is my own opinion, if there is a pivot here, that it's on the basis of people that know what they're doing, that have some experience in the sector, good geological minds behind this, and also, where are you looking? I mean, we made I'm not saying it's right or wrong, but we made a concerted effort and decision to sort of differentiate ourselves a little bit. And again, recognizing that you mentioned new kid on the block, a little bit later to the game. Eureka is not, 2017, 2018. This is relatively recent for us. So the thesis was, where do we go that isn't just sort of picking up a postage stamp next to where everybody else is, and this just happens to be some available ground in the right area? We looked, quite globally at, where do we see the right geological characteristics? And this is really credit to Sean, not so much myself, but, where do we see the right geological affinities? Where do we see the right, geochemistry, geophysics, structural controls, environments where these kinds of deposits could exist? And then you factor in with that, and this is a big part of it, I think, as well, geopolitically, where do you want to be? And, we are certainly seeing trade relations getting more and more strained around the world. And so, if you want to find these things to feed this supply, where do you want to be? Do you want to have the fear of nationalization or, trade relations? So, we were able to target an area of northern Quebec where mining has existed. In fact, one of the largest nickel mines in the world is up there in Raglan. There's a deep sea port, there's some infrastructure, but by being a first mover into a region, you're able to pick up large land packages and pick up what you believe to be the most prospective land. And that gives you, we think, a better shot at success, because we all know that, there's going to be misses before there are hits in the exploration sector. And so being a bit of a first mover with large land packages in the right area for us was the differentiating factor. And on the basis of the fact that it was coming from a well-known, I think well-regarded prospector that was sort of hanging his hat on the potential of these prospects.
Okay, and so Steve, if I look at you, obviously you're in the right location. You're in obviously, you've got Clayton Valley and Fish Lake down in Nevada, but you've also up there in Manitoba, right? So you're in the right jurisdiction. But when you're looking around at the market like this, do you feel like you're sort of almost incentivized to be more promotional, Or do you do what you say? You said it earlier. You got to be based on the fundamentals here. I want to do things the right way. So, have you found yourself slightly torn, or looking around and going, "What on earth is happening out there? How do I take advantage of it?"
Well, we're competing for capital. I mean, that's the nature of it. And the company that's most understood and communicates well, and meets milestones on time, I mean, they're the ones that are going to attract capital. And so there's a fine balance between managing those strategies. Certainly, part of being on the panel here is to educate and introduce companies like ours to investors. We have a fairly large portfolio, and so the challenge for us today is how do we divide up capital to ensure that we can advance those projects. We spent a lot of time looking at many projects throughout North America. We've been pretty strategic about where we focused our energy, but in a tighter capital market, we're going to have to be, a sharpshooter as to how and where we spend money. We've got 2 active exploration programs ongoing right now. Much like Jeff, we were first mover into northern Saskatchewan, focusing on pegmatites in that region. And since we took on a very large land position in northern Saskatchewan, there's about 8 or 9 other companies that have staked ground in and around us. And that really says a lot about what's going on in this industry. I'll have field work there starting here in the next week to 10 days. So, we're continuing to be very careful about how we spend our money, and hopefully we can advance our projects in the U.S. and in Canada and deliver for our shareholders.
Right, and so I've got to come to you, Robin. We've seen stories, especially this week, Azure Minerals. They used to be chasing silver in Mexico, then they segued to nickel in Western Australia, and only a year ago started looking at lithium. Just turned down a humongous offer to take them out. Stock has gone from 20 cents 9 months ago through to $2.90. When you see companies do that, I can't blame you for doing what you're doing. You've got to do what's relevant, what the market wants, don't you? But how do you get that balance between not being seen to flip-flop from one thematic to the next, and not actually getting anything over the line? I mean, how do you manage that balance?
Well, I think you have to look at the facts on the table and where you are, and make an honest appraisal of the opportunities ahead. So, if you look at some of the advantages of lithium, exploration development, there's a lot of things that are attractive. It's the price is extremely high. It's not actually a very rare mineral. It can be found in many places, and so if you have a resource, in our assessment is, okay, well, do we have a realistic chance of getting this project to production without diluting our shareholders and taking 10 years, right? So we've been doing some research. If the companies that have gone from exploration and development, their market caps have gone up 10 times, or sorry, 100 times, and on average. But what happens is the companies issue 10 times more shares, so you get a 10 bagger, right? So we actually think that we can get to meaningful production that would justify a much higher market cap, and do that without excessive dilution to our shareholders. So that is it's an opportunity that doesn't come along very often in any metal. And so, that's the determination, as we think we can make a big return for our shareholders by executing over the next, 24 to 36 months, not 10 years. So, we think it's a tremendous opportunity, and that's why we're pursuing it. So, I think the market is now for project like ours in a show me mode. Okay, show us what you got, show us you're delivering. But, we're convinced that if we can execute, we're going to make big returns for our shareholders.
Okay, and Jeff, and just on, and by the way, guys, do feel free to kind of build on what each other says, and you don't have to wait for questions from me. I think most people are here to listen to you guys, not me, that's for sure. So Jeff, with you've started with a kind of big marketing push. You kind of wanted to get noticed, put your head up, get noticed, but you've got to then tell that story. So for you, North American story, what do you think is important for lithium explorers in terms of actually being able to create value for shareholders and actually move the company forward?
Yeah,
what do you focus
yeah.
on?
There's no question that you need to sort of delegate some capital towards making sure that your story is being heard. We're certainly cognizant of that. We're helped a little bit by the fact that the region where we're working, and this speaks a little bit to something that Robin said earlier about majors coming into this space, and we think sort of the longevity of this potential market or run, if you will, in this commodity. In the region where we're working, there's a private company. This is not particularly well known, but we've sort of made a bit of a point of showcasing it. That it's called Cobalt Metals, and it's a private company that's recently raised $200 million US for sort of critical metal and battery metal exploration, and it's backed by the likes of Jeff Bezos and Bill Gates and Richard Branson as major shareholders of this, and they're actively exploring in the neighborhood that we're working in for nickel. But to me, it's an indication that the need for this supply and the recognition from generalists. There's no question that the need for this commodity is well known. Throughout the population, whether you're a mining investor or not. And so for us, I think part of the upside or the potential strategy here is again, as an early exploration story, is less about production and more about identifying the kinds of concentrations and scale of a deposit that would attract some of these big players that are, we believe, waiting in the wings to secure this kind of supply in safe jurisdictions where they believe they can put an operation into production. So again, I think that's critical. Is are you going to find, as Robin said, this stuff's out there, but you're going to find enough of it, concentration of it that is attractive enough to a mid-tier or major company to want to come and take you out.
Yeah, I've noticed like the kind of rules in investing in this space certainly for the last 2 years seem to have changed. So if you look at the gold market in moments like this, they should be flying, but they're not. Do you think that the investing community is changing too? With you guys, you've got a lot of EV narrative going on. You've got automotive companies, battery manufacturers moving, upstream, as it were. Is that going to be? Coming back to that, how do you take advantage, or how do you change your thinking around how you build a company? I mean, Steve, you must be looking to new sources of income and not being completely reliant on the market, especially when it's been like this for a while. I mean, what are your thoughts on where the money's coming from in the future for battery metal companies?
Well, good point, Matthew. With a portfolio, and I've certainly messaged this to our shareholders and new investors, is that I don't have to own 100% of every project. And so, one of the ways that we can have capital deployed at our projects is to joint venture, to option for an earn-in, to partner in some way in our projects. So we're actively looking at those opportunities, again, with good projects in Manitoba, Saskatchewan, and 2 in Nevada. Those are opportunities that are non-dilutive to our shareholders. So, we're going to continue to need to access capital. That's the nature of our business, but there are other ways that we can certainly grow our business in partnership. And the other point I want to mention too is what's, with this generational opportunity that is happening here. We're seeing technology changes that are really interesting too. We're seeing new technology on the geophysics side and the processing side, and in a variety of areas that I think are going to be shifting efficiencies and create opportunities for companies too. So what I've seen, certainly from our shareholder base, is I've seen investors, younger investors, investing in lithium stocks that have never invested in commodities before. And it's being driven because they were maybe buying Tesla, or they were interested in technology. So we're seeing a younger investor investing in particular battery metals as they search for opportunities. So that's what's really interesting about this space that we're in right now. We're not seeing the traditional commodity investor alone deploying capital. We're seeing new investors coming in that maybe follow technology or the auto manufacturers, and are finding lithium companies as an opportunity.
If I can just chime in on that, I mean, I think what I've really noticed, and I'm sure all three of us have exposure to other sectors of the mining and metal space. And what I'm seeing that's really a game changer in our sector, again, it's slow, and so it's not, it hasn't happened overnight, and maybe I'm being a little bit hopeful, but what I see here, to add on to Steve's point, is that younger demographic that understands and recognizes why we need this commodity, because it fuels a desire that they have for a cleaner, more energy efficient world. And there's a slow, albeit slow, but there is a tie-in to that with where this stuff comes from. And mining, when you're hearing Elon Musk and other well-known billionaires talking about the need for this commodity and getting into the mining sector to secure that supply, I feel as if it is gradually creating a new understanding of the importance of mining in our world. And whether that, I have to think that could trickle its way into the base metal sector and the precious metal sector, in terms of, hey, mining isn't necessarily the bad guy here. They're actually out supplying something that we need to live the kind of lives we want to need. And lithium has really been, cobalt caught a bit of attention for that, maybe some other commodities, but lithium has really been that catalyst for, where does this stuff come from? And if we want it, what do we need to happen? We need people out exploring, and we need people mining. And I think that's good for our sector across the board, and has the potential to drive new capital into the sector that's never been here before.
It does. It does. But I just wonder, and I've asked this question of a few CEOs, and I get some quite interesting answers, which is, if you were starting a company out today, would you prefer to keep it private, or would you go public? I mean, Robin, what would you do?
I'd go public. I mean, the amount of money that you're looking at raising is significant, and the public markets, in my view, are still operating if you have good projects. There's sources of capital for lithium projects, such that will come from streams of offtake if the downstream users see that there's product coming that you can market and sell them, and the very significant amount of money. There's royalty streams. There's larger companies looking for joint ventures. So there's ways of financing your project, and I think. But if you have a really good project, you probably want to keep as much as you can. I look at it for investors looking at this market. You're gonna have a company that's going to get taken out. That's one way of making your score. And the other way is if your company goes into production. That's the two main ways of having a successful investment in this business. So you either want to invest in a company that's got a world-class size resource, or a company that's going to start making some money sooner than later. And I think you need to judge your investments based on that. Where is this company on the development cycle? How is it going to make me money, and in the not too distant future? And there's different ways of doing it. So earlier stage companies are completely credible, but more advanced stage companies, can be just as successful. So,
but they're all being kind of penalized the same way, aren't they? In terms of exploration, development, and production companies are all being devalued by the market in the same way, even though they're very different risk profiles involved there, which is interesting. The other thing, I'm not quite sure who said it earlier. I think it might have been Steve, talking about, and you just said it as well, Robin, with regards to getting into money sooner. So getting into money, let's be clear about what we mean here. It doesn't necessarily mean getting into production sooner. It might mean some kind of an event which may allow the shareholders to monetize their investment to date. But do you think that, and Jeff, one for you, do you think that people, because if I think of the Canadian market compared to the Aussie market, it's always been a case of drill to the edge of the envelope, and we'll just see how big we can make this thing, and someone will come and take us out at some point, right, along that process. But we don't have the responsibility or the effort of having to raise the capex, actually get this into production ourselves. That seems to be changing, or that mentality seems to be changing. Are you seeing that, or am I wrong?
Yeah, no, I think that, again, the market cycles change, sort of all the time, whether it's, risk on, risk off. And so I think, corporately, you sort of have to have, a bit of you know, you need to be dynamic, but at the same time, you need to have a general philosophy. I mean, to Robin's point, you know, who do you want to be, and what are you ultimately proposing as, you know, your value proposition to investors? And I also think that, as Steve touched on earlier, you know, we go through these pockets of time in the market like we've sort of been in the last 12 to 18 months here, where access to capital is challenged. And so I think having, you know, a little diversity, potentially having, as Steve mentioned, you know, joint venture partners, or potentially being able to figure out, you know, what assets for your company um, justify, you know, ongoing capital and budgeting versus, look, this doesn't quite cut the mustard for us. And so you know, I think you need to sort of stay focused on where assets continue to, you know, check the boxes. Otherwise, you know, you get too distracted, and maybe you're carrying things that you shouldn't. So I think money is certainly there in this sector anytime, good markets and bad. It becomes much more selective in challenging markets, and that's where things like management and the quality of the asset, or perhaps the stage of the asset, become more critical. And I think that's where you want to, you know, as an investor, you want to align with groups that are going to be there through good and bad markets, and projects that can survive through, you know, marginal downturns in any sector, and be in that top percentile that are going to be there through, you know, bull markets or not.
Right, but how do you guys trying to paint the picture for those funders, whoever they may be? Maybe from capital markets initially, it'd be from the equity raise through issuing shares initially, but you're sitting operating in a market where the Chinese represent 56% of the EV battery market, Koreans represent 26%, Japanese 10%. Asia is a very important part of this, but you've got the US, North America trying to build its own critical mineral security, but yet you guys aren't getting the incentives or the capital access that you're going to need to actually move these things forward. You're the lifeblood of lithium producers, or will be at some point, one hopes. So what do you do now in terms of the way that you shape and mold your company to kind of, you know, encourage North American investment? I mean, Steve, what do you think?
Yeah, I mean, I think we've seen slowly a shift that's changing from a policy standpoint, and from a government regulation standpoint, and from an investment standpoint. I mean, a lot of the focus from a media standpoint, and certainly from an investment standpoint and policy standpoint, has been on the downstream side. I mean, we're seeing battery factories being built in Canada, in the United States. We're finally starting to see investment in processing. But I think that, you know, from a government standpoint, you know, they like to cut ribbons at battery factories, but cutting a ribbon at a mine isn't as necessarily as interesting, or, you know, in the past. But that's changing. We're seeing a shift, obviously, with the Canadian Critical Mineral Strategy that came out in December of 2022. Obviously, with Biden's strategy, with the Defense Production Act, the Inflation Reduction Act, and really the white paper on lithium that came out in June of 2021, we're seeing a shift in government policy that is really starting to focus on the mining and extraction side. And the real key here is to put ESG issues at the forefront. It's not about no impact; it's about low impact. It's trying to do things with best practices, and frankly, Canada and the U.S. have some of the best practices in the world, and some of the strictest rules and regulations. So, you know, I think we're seeing a shift here where finally government is in at the community, at the municipal and state and provincial and federal level, where they're starting to focus on our industry. But we need more. We need to continue to lobby. We need to continue to educate, and we need to continue to focus on this industry. And I think that shift is slowly, gradually happening, and hopefully we'll see more of that to come.
And Rob, what are the risks to that happening?
Well, there's always the market risk, and the uneven adoption of the EV technologies, and some of the mines that are coming on the lithium sector are quite large. The trends, I think, are pretty well established for the next 10 years, but it's uneven. So, we've seen that there's troughs in market interest. If I was worried about capital and the ups and downs of the markets, I would have been out of this business many years ago. You have to have conviction in that you know where you're going, and that you've got a solid game plan and you execute. And, when I wake up in the morning and I know what my strategy is going to be for the next couple of years, where I'm trying to go to. I want to develop a project and I want to find more, valuable deposits, in the area or nearby. That's something I can go and work. Our team can work on, every day. So until that, belief gets shaken, we think, by executing, we're gonna be successful. So that's what it takes. You can't be, looking at the direction of the wind every day and try to sail, where the wind's taking you. You've got to know where you want to go, and that's I think an important distinction of companies that are going to be successful and companies that are just kind of, we need to do this because that's what the market wants. So I think that's really important.
Okay, and just tell me this again. I'm trying to work out how the problems that you guys solve every day, right? You've got to build companies, you've got to kind of build that share price. That's what you think about every day, as do investors. But when you have to do that with the backdrop of a very erratic lithium pricing and a market which is fairly nascent in the shape of EV, lithium carbonate prices in the last year were 85,000, down to 20, back up to 30 now. How do investors work out? I'm talking maybe more institutional investors. I must admit, maybe that's not quite relevant to you guys yet. But what's your thoughts on how the kind of Bay Street and bankers think about the lithium market as it stands at the moment? Because Robin just said, some big suppliers, big producers out there. Maybe they just turn the tap on, and it's all over.
Yeah, I mean, it's interesting. I mean, I as much as I spend a lot of time, speaking with investors and institutional investors, in a lot of cases, they're not necessarily substantially smarter than anybody else, and they're as affected by trends and momentum as anybody else. And I find it, it's quite interesting sometimes when these commodity prices really start to run. Of course, it draws everybody's attention in, and okay, this is the space that I want to be. And I think we've seen an interesting correlation here recently where the pull back in the price of lithium has actually sort of potentially been net beneficial to the space in terms of, production of batteries and EVs and the cost base of how, maybe these things become a little bit more realistic in terms of pricing. Because if you've got a commodity that's price is going through the roof, that's a key component of what you're producing, that product is going to be priced out of the average person's range. And so, seeing these things level off to a level where, the price of the commodity is high enough to be valuable and to drive people like this group to go out and try to find more of it. You also want to make sure that it doesn't price itself out and technology, comes along and says, well, that's just way too expensive. Let's go find an alternative. So I think, investors sometimes need to think a little bit about, do you want things to go infinitely higher and just price the whole thing right out of reality? Or you want to find these ranges, like I feel as if lithium is sort of finding here recently, that are reasonable and that, people, manufacturers, end users can strategize longer term about, where that price might sit. Would it be nice if the price went higher? Sure. But I think there's a reality here in finding a range, sitting in that range, and allowing for longer term planning for the use of that commodity. And I feel like we're sort of there right now.
No, I agree with you. A creative growth every day of the week for me. Steve, let's talk about something Robin said. I asked Robin whether he would have considered like maybe going private versus public in a market like this. I'm assuming a similar answer to that.
Well, I've been in the public markets for close to 30 years in some form, whether I've been on a board or an advisor to board or in management. And, as Robin mentioned, access to capital, in my view, is more robust to the type of investor that we're talking about. I mean, this is a fairly speculative investor, especially at the exploration stage. Not all companies are going to be successful, and so we're accessing a wider audience, and so I'm certainly more comfortable on the public side.
Okay.
I have been involved.
Let me ask you that question then.
Sure.
Okay, so you're on the same team. You and Robin are on the same team, and I suspect Jeff too. So let me ask you this question then. So that means the dependence on retail. I think, Jeff, you referred to some of these younger investors coming through. They're having to learn the narrative, the language, the vocabulary, the fun in the games that are played in the space, and work out what good and bad looks like. But so let's go on an education process here as we kind of run down the clock here. where what do they need to know? These new investors, what do they need to know? How do they make money in lithium? I suspect demand drivers around EV is going to be a big part of that. But if you were giving 3 minutes or 2 or 3 minutes advice to a new retail investor looking at lithium as the way to make money, what would you say, Steve?
Well, I think certainly research should be done at a macro level, but then also understanding how the mineral extraction and mining industry works, and understand also this is a marathon, not a sprint, right? I mean, these projects take time. Investors have to have some level of patience here. In many cases, the upside and certainly having big wins can take 4, 5, 6, even 7 years. And so there has to be, or even longer, there has to be a level of understanding that these aren't necessarily quick wins. And I think, that's really important. I think the management's track record is really important. I think taking a look at the team that have been built, the technical team, what have they worked on in the past? Have they had success in previous endeavors? I.e. betting on the jockey. And, I think jurisdiction now is important too. We're finding lithium all around the world today, but, why is North America important today? And I think jurisdiction's important politically. I think we're going to see, the end user here in North America. And so projects here in North America, in many cases, I believe is one of the strongest places for investors to be.
Yeah, I think it's, the investor has to ask the company, point blank, how are you going to make me money, right? What's your plan? And when's it going to happen, right? Is it everybody wants to be, read the press release the next morning that they've hit the giant intercept and the stock rockets up. That's fairly rare in the business. But you can look at, do they have a good exploration package and good prospects? And, how much of the success of the company is riding on the drill bit? How much of the success of the company is in execution of the project? How good is the company in terms of its strategic relationships and really all aspects? So I think if you can explain what it is you're trying to do and when it's going to happen, you give your potential shareholders more comfort that what it is they can expect in terms of their investment and its possible outcome.
Yeah, no, I mean, to repeat what's been said, I mean, I think it's having a clear mandate, the company, understanding what it is you're investing in, what the potential catalyst can be. And yeah, I'm always pleased to receive questions, queries, emails, phone calls from investors who want updates or who want to ask specific questions. I think the mass majority of people don't really do that, and I think there's nothing wrong with putting it to a CEO or the IR person or whatever to say, hey, listen, where are we with this situation or that situation? Or you said in your last news release that this was coming in a month, and it's been 3 months and we haven't seen anything yet. Recognizing that, look, especially in the exploration sector, like things take longer than anticipated. There's always some hiccup, and so you've got to give management a little bit of slack. But yeah, I think investors need to be proactive about informing themselves through following on social media, through being on email lists, through communicating directly with management to ensure that their investment thesis is still on track. And if it's not on track or there's something significant has changed, potentially it's time to move on. So I think as management of public companies, we probably all take it quite seriously that a shareholder, whether they hold 1 million shares or one, are owners of the company, and we work for them.
True, you do. And all too many people forget that. Look, I'm going to wrap up here. Give you a chance, each of you, to tell people or explain to people why they should be investing in your company specifically. Steve, I'm going to hand that over to you. What say you?
Great. Well, thanks, Matthew, and thanks, Jeff and Robin, for being on the panel today. Acme Lithium, really, we're focused right now on our flagship project, which is in southwestern Nevada and Clayton Valley. And what's critical about this is it's a brine project. We're in the midst of a phase 2 program right now. We're in the process of completing a pump test, which is probably the most critical milestone we've achieved in the last 2 years. And really the goal here is to get to a resource. So the whole characterization of this program in understanding the aquifer is, we know we've got grade, do we have flow, and then ultimately do we have reservoir? So we're going to know all that here in a very, very short period of time. So this is key for us in getting to our first initial resource. Again, we'll have updates here rolling through the next few weeks. And again, we're in the midst and end of that pump test right now, and we should have more information here shortly. So critical milestone coming up, additional work on some of our other projects as well, and we're excited to deliver hopefully this fall.
Yeah, for Grid Metals, we really started our lithium initiative in seriousness at the beginning of 2022. So in 18 months, we've established initial resource. It's a high quality resource, spodumene. We've started our permitting process now for a bulk sample. We have 2 milling options that are close, and we want to make it into the production with minimal shareholder dilution during the time when the lithium prices are extremely high, like they are now, even though they've come off. So to do that, we have a game plan, and we think that if we're successful, we're going to see a market cap much higher than we have, and we'll be making money for our shareholders. So great opportunity for us at Grid currently.
Yeah, so I mean, we're as you pointed out at the beginning of this, Matt, we're sort of in the early stages here. So as a company that was formed in the last 12 months or so, only in the last 6 to 8 months have sort of brought on these assets. We've spent the last several months kind of getting our ducks in a row. Quite frankly, we executed and closed on the acquisition to bring the assets in 100%. We closed on a financing in an otherwise pretty challenging market this spring and summer and brought in $6.7 million. And we've engaged what we think are one of the best contract exploration groups in the business, Ground Truth. And so we've just, in the last month and a half or so here, got boots on the ground. We're going to be doing recon work throughout the entire portfolio. Obviously, a lot of that is mapping, sampling, prospecting, identifying the areas that we think are the most prospective. We're fortunate in this part of Quebec that it's sort of a dry tundra as opposed to some of the southern and western parts of Quebec that are a little bit more swampy and marshy. So lots of rock exposure. We're able to sort of fast track the prospecting program. But to my point, having got all of our ducks in a row and being in a position now where there's boots on the ground, we anticipate assay results, target delineation, advancing what we believe to be the most prospective areas towards drilling. And the hope is that we're prepping up now for a first phase of drilling at the end of this summer, and are hopeful that there are multiple targets that emerge from this program. So we see lots of news flow coming, all sort of moving toward an eventual drill play that ultimately is what the market and investors kind of want to see, and that's coming later this year.
Brilliant. Well, look, guys, I'm Steve Hansen, President and CEO of Acme Lithium, Robin Dunbar, President and CEO of Grid Metals, and Jeff Wilson, CEO of Eureka Lithium. Thank you very much for your time today. And Acme Lithium, Grid Metals, we know those stories well. We think they're well-run companies, good assets. Have a look, and maybe even have a little tickle, folks. Jeff, you're going to have to come see me after class. There's a new one. There's a new one. We need to hear all about it.
You got to put an apple on his desk, Jeff.
Consider it done.
Okay, guys, we'll see you soon. Thank you very much for today.